So I couldn't just leave it to chance for them to turn around and say, well, actually, I can't see it. Can you resend it? I'll check my junk. No, I can't see it in my junk. Oh, I passed it on to this department. Call that department. So you don't want a situation like that when you're invoicing for large amounts of money or for any money. You want your money to arrive on time, because that is the reason why you're in business, so that you get paid. It's not a charity. Unless you are a charity, that's a different thing. So this is the reason why, like I said, I used to go and drive literally and hand deliver the invoice, because sometimes I would hear the story, oh, I can't see it, can you resend it? You resend it, and then it takes ages to get hold of them. It could take 2-3 days, for example. So then it leads into another week that you haven't spoken to that person. Look, I'm here to give you the good side and the bad side, okay? So I'm just giving you the facts of what can happen, the scenarios, and I want to be able to do that to help you to be mindful of this. You're the business owner, you're the director, you have to literally either drive down there and just hand deliver it, and you get to meet the people as well that you're working with, build a relationship, take them a coffee during their break. Say, hey, I've got your coffee here. Oh, and here's the invoice, and they'll open it, and you're sitting there, and they're like, okay, yeah, they've looked at it, yeah, that's fine, great, excellent. Is there anything, because, you have seen it, but I'm just making sure that, is there anything that you want to ask me any questions about? Are you happy, for example? Is there anything that we can help you with, for example? Okay, so that's a good reason as well, so that you can keep communication open. That's why it's good to have regular phone call conversations, for example, or meetings, so that you keep the communication open at all times. And with regards to the invoice finance, as wonderful it is, it is a good thing to have this weekly amount, this cash flow, so that you can pay your staff weekly and not have to worry. All you've got to do is press a button and it draws into your bank account within an hour, for example, and you've got that money there, so that you can pay your staff members, so that you can pay your bills, so that it helps with cash flow. So it's really good, rather than waiting for this, for people to pay you as and when, and they could possibly turn around and say, well, I don't have the money this month, I've got it next month, for example. So then that puts you into 2 months that you're not getting your money. So that's why invoice finance is very good like that, for example. Okay, so I'm going to break it down for you. I'm here to give you the good, the bad, and the ugly. I'm here to tell you all about invoice finance. It is good, but it's got its pros and cons, okay? So you have to make that decision, okay? But it is a good thing. It's just, there's a percentage, and then you've got to then also make sure that they've received the invoice for the ones that have received it, for example. So it is a powerful tool. It can help your business run smoothly, and I'm talking about where we are today, okay, and that you can always reach out to me. If you've got any comments, you can always reach out regarding invoice finance, and I will answer the question here in a live, for example. So some of you may know or may not know, what is invoice finance? So invoice finance is exactly what it says. It's where the finance is a way for businesses to get paid faster for the work that they've already done, instead of waiting for a customer to pay their invoice. invoice finance, it also allows you to get a advance on payment, which is really good. So you've invoiced and you're getting paid straight away. You can get paid that day, or you can use it. Only draw down, I always say this, only draw down when you need to. Don't get carried away, otherwise things will run out of hand. And when you need that 10%, for example, then you can't get at it, for example. So be careful how you use this, because it can be tempting, for example, for people to spend all of it and then there's no rainy day fund for if the invoice, or if an invoice is 3 months or more. So let's dive into it. Let's get into it. So like I said, that if you are waiting for a customer to pay the invoice finance allows you to get an advance on your payment. So there's types of invoice finance that you can get, for example. I'm going to cover two main types of invoice finance. So there's invoice factoring, and this is where finance companies collect payments directly from the client. For example, you draw the invoice, you draft the invoice, you send it, you upload it onto your factoring dashboard, usually like a ledger thing. You can see it online, see how much money that you've just uploaded invoice wise, and it will tell you how many invoices that you've just uploaded, how many is outstanding, what the amount is. They'll also tell you what the availability is that you can draw down as well. But there's also invoice discounting. This is where you keep collecting the payments, but the finance company gives you the funds up front. Both of them are, I've used both of them, and they seem to be very similar, but there's one whereby it stamps the invoice. For example, like invoice factoring, they'll stamp the invoice, send it to the client, and they will say in that invoice that this invoice belongs to the bank or whichever factoring company it is, because there's lots of factoring companies besides banks, for example, and that this is the sort code account number or IBAN number that you're to pay, SWIFT number, routing number that you're to pay, and you must pay us directly. You do not pay the customer. This is a legal agreement and you must pay us directly. Whereas with invoice discounting, where you get to collect the payments because the bank has given you the money, for example, up front, but you've got to pay it back. So each option, it has its pros and cons, and I'm going to break it down for you in this class today, for example, this YouTube live. So, but I want to explain to you why invoice finance is useful. So, would you use invoice finance? Many businesses do, because they face cash flow gaps when clients delay payments. This can create real problems that you need to pay your staff wages on time, purchase inventory, or just keep the lights on. Invoice finance bridges the gap. So allowing you to access funds as soon as your invoice is issued without waiting weeks or months for your clients to pay. Sometimes it's months. When I say months, I mean like 4 months, 5 months, 6 months. So this is the reason why it is good in one way, but if it's over 3 months, then you get into trouble. There's a block there, for example. So how does invoice finance help you pay your staff wages? Well, let me talk to you about the real power of invoice finance. It helps you to pay your staff wages weekly, bi-weekly, monthly. Every business needs cash to cover payroll, but many small businesses struggle when clients don't pay on time. It's a real struggle for small businesses. I've been there myself. It really is. So let me give you an example. Imagine that you've just completed a project and the client agrees to pay you in 30 days. They've made an agreement to even pay you monthly, and you're doing the work, for example, but payroll is due in 10 days and you need that cash to cover employee salaries. So what would you do in that situation?